Yeah. So, all right, we'll close that one out. Andrew, thanks for the contribution there. Great conversation. Moving to thing number 5. Again, we've got our investor knowledge education thing. We're gonna talk about how to make money, whether long term or short term. So, Gary, start with you. I'm gonna ask you, how do you identify long term growth versus short term growth trends?
Well, I think the key thing is to take a look at something and ask yourself how long that trend can continue. So let's use like a really simple example here. 20 years ago, it was obvious that online shopping was going to take share from in-person and retail shopping, and that Amazon had positioned themselves to be the winner in that space. That was a trend that could go on for a really long time. Now, the graph that Andrew put up for this week's educational thing showed a chart during COVID of the COVID darlings, Zoom and Peloton, right?
Crazy chart. Yeah.
Exactly. And so, those stocks ran up from like, one of them ran up from like $100 to almost 600. The other ran up from like $40 to 160, 170, something like that, and then came straight back down. And so, I think the thing that was obvious was that we weren't going to be locked down, locked at home, no one ever going back to the office, no one ever meeting in person, no one ever going to the gym again. Like those were never going to be sustainable trends. And it was obvious that they were benefiting from a temporary dislocation. So there are other ways to play that as well. One of the things that we did during COVID was we found multiple companies where the stock prices had just been crushed as a result of short-term trends that we didn't think would continue. One of them, HCA Healthcare, during COVID, people thought that the hospitals would go out of business. My conclusion was there was no way that was going to happen, and that the idea that all of our high-end medical care, all of our high-end treatment facilities were going to be focused on all COVID all the time, and nobody would need to go for a knee replacement, for cancer treatment, for heart problems, like that's it was a ridiculous idea. And so we bought a huge position in HCA and more than doubled our money in 10 or 11 months, something like that. We did the same thing at Houghton Mifflin. That stock got hammered because a lot of school boards didn't meet to order new textbooks. So we were buying that stock below 5. We were buying the 492, 493, something like that. And, basically said educational spending didn't disappear. It just got put on hold for a year. Well, 13 months later, that stock that we were buying for foreign change was acquired for $21. So, we made a great return because what we saw was the market was responding to short term news and we were looking at long term value.
Gary, do you find it easier to identify short-term opportunities or long-term opportunities? Do you see a benefit, pro, con, one versus the other as well?
So, in general, I like to find things where the long term trends are in our favor. It takes the time pressure off of us. And if you can find stocks where you think they're going to grow at very high rates for a 3, 5, 10-year period, chances are you're going to do really well. And those are opportunities to make not just double your money, but sometimes much, much more than that. With that said, Rob, I think the best place to make money are situations where you have a different opinion than everybody else, where conventional wisdom has a particular idea, and you see the reason that it's not correct. And some of those are going to be shorter term plays, like HCA, where we made more than double our money in under a year. And that's okay. It's in general, if you say, which do you prefer? I like identifying a great long term trend because you make more money. But there are often opportunities, and we've done that at times over the last few years. Every now and then, I see a stock that's just it's overreacted to something that we believe to be temporary. And on occasion, once a year, twice a year, we'll buy a small options position in something. And we just did that in a security company where they announced some bad news. The stock got cut in half. We thought it was ridiculous. But rather than taking the risk of owning the stock, we just bought an options position that ended up doubling in, I think we were up 110%. I forget, it was either 2 or 3 weeks. I'm not going to turn that down. When I see those opportunities, we'll act on it.
Gary, do you find the timing to be more critical with short term versus long term, right? To where getting out at the right time, like when we talk about, a Zoom or a Peloton, obviously, yeah, the run up, but then the run down was just as massive.
Yeah, it is much harder on the short term because you need to thread that needle, right? You
Right.
have to get it exactly right. And the thing with Zoom and Peloton was they had bumpy stock charts. There were times that, the right move was by the dip, other times, you should have shorted it all the way down. It was hard to tell exactly when those stocks were going to stop going up and, start going down consistently. And there are times you can get it right, but it can be really difficult. And usually the way that you find out is the company announces a bad earnings quarter, they take down guidance, and then everyone says, oh no, and the stock could be down 20, 30, 40% in a day. And at that point, you're kind of stuck with it. If you can identify something that you think will do really well over, say, the next 5 years. And I have a couple ideas in the portfolio like that right now. The stocks have overreacted on the downside to unimportant short-term news. I like the long-term outlook. And so I'll sit and hold it. And if I have to hold these things for 3 years, 4 years, 5 years, we'll make a ton of money in them. At least I think we will. It's obviously anything can happen, but I own these because I don't need to get the timing right. And if they go down again on short-term news, that's fine. We'll just hold it. And, as long as I see the long-term thesis playing out, that's where we want to be. And so it takes a lot of the timing pressure out of it.
Great stuff there, Gary, and thanks for the insights. Again, if you have a question, head to our website, deepknowledgeinvesting.com. Utilize the Ask Gary feature in the top navigation bar.